It's been a wild week for stocks, and we've been getting wild here in the studio. So do not change the channel because you never know what might happen. And you know what? We're always fired up about investing. U.S. markets are closed today, but the major market gauges were all down for the second week in a row amid, yes, rising geopolitical threats. It's something we've talked about on this show over a week ago. Syria, the strikes there. North Korea, the looming French election even. The NASDAQ getting hit the hardest, down more than 2% this week. Investors also keeping a close eye on earnings, which got underway this week, led by the banks. Joining us now is CFRA Research Investment Strategist Lindsey Bell. Lindsey, always a pleasure to see you.
Thanks for having me.
I don't know if we have a chart of this, but you saw yesterday when the news broke of that bomb, that Moab bomb being dropped in eastern Afghanistan, the markets reversed. Stocks went down and money rushed toward treasuries. Do you think that that is going to be something that weighs on the markets in the weeks ahead?
Well, look, I think there's always an overreaction, especially when bad news like that comes out. And the market's usually pretty quick to snap back, especially after 3 days off. You know what I'm saying? So I think there's going to be some volatility in the market for the foreseeable future. Like some of the things you just mentioned are going to be top of mind for investors for the current period. But right now we are focusing on earnings season. Those banks came up with actually pretty good earnings, which surprised me because the bar was high for these guys going into the results. And that was after all these concerns about slowing loan growth and weak trading volumes. Well, these guys were able to beat those very high bars. And Citigroup and JP Morgan, especially with their investment banking revenues and their fixed income commodity and trading business, offset some of those weaker areas, which was really impressive.
Well, did you, because the Wall Street Journal article says that they lead with the idea that the banks also warned that don't expect kind of quick benefits from rising interest rates and also the Trump administration policies. Do investors take that to heart?
No, I don't think so.
Broadly speaking.
I don't think so, because if you look at the valuation of these stocks, they are so extended, even after yesterday's losses. JP Morgan and Citi, I think, were up initially in the day and then ended up down on the day. And Wells Fargo obviously was hit the worst, given the sales scandal that they're going through. But you still look at those valuations on a price-to-book basis. They're above the average for the banking group in general, and they're only 14%. For the group is only 14% above the highest point reached after the recession. So it's frustrating for a fundamental analyst. Like, I'm looking at these numbers. Yes, they were good, but they're off of a really low base last year. It's just hard for me to see that these stocks are still up 20% since Trump's election.
Yeah, and let's not even talk about Tesla. I'm trying to make sense of that valuation.
I know, the whole market's frustrating given the premium valuations that we're trading at.
Well, one of the biggest things I saw on the banks and the read-through here is that their guidance was, hey, we can't take any more market share from each other. JP Morgan was very tepid. They're like, listen, we did well on the trading, especially when it came to equities and fixed income. But guess what? Don't expect that going forward. So they were really holding back. And I think that's what led to the market trading down after we dropped the mother of all bombs, because if financials aren't leading this market higher, what else is? Their earnings are supposed to be up 15% this cycle. Everybody knows tech has done well. That's why it was up over 12% last quarter. So if the banks aren't going to lead it higher, what is? Especially if the big banks can't do it, because the regional banks are in deep trouble because they're relying on net interest margin. They're relying on deregulation. The bigger banks aren't. And that's why you've seen regional banks, Fifth Third Bank, Region, Zions, all of them down about 10% so far.
We get, just a side note, the likes of BB&T and KeyCorp, some of the other banks, and Goldman Sachs next week.
We'll get those guys next week, and it's definitely going to be interesting to watch the regional banks, because you know what, I think this quarter is going to be just fine. PNC was actually an outstanding number yesterday, and I think it didn't get enough airtime. They said net loan growth is going to be up in the higher end of the mid-single digits for the full year, which is impressive, but they're entering new markets, maybe taking share from some of the Wells Fargo customers. But I think this quarter is going to be good, and I think that investors are going to ignore the future, and that is frustrating, because I agree with you. I think that the cost of capital is going to be raised in the coming quarters, because they're seeing net interest margins expand this quarter. Next quarter is going to be a lot tougher when the cost of those deposits goes up and they're not putting out more loans at those higher rates.
Real quick, if you look at the broad sectors in the market, is there any area that doesn't look overvalued?
How about well, yeah, I mean, no, I think that it's you know, I did like technology earlier in the year, but that's run up. I mean, we're getting a pullback now here going into earnings season, and expectations are very high for that group. It's a tough market right now to get, you know, I look at it with my own personal money. I'm like, where do I want to put it right now? It's a really tough decision given how far we've run.
Yeah, I look at that 10-year Treasury. Oh, it yields 2.23%.
Right, exactly. Another reason to stay away from the banks, right? You
Right.
know, the yield curve is just tightening.
Right. Lindsey, it was great to see you as always.
Thank you.
Take care. Have a great weekend.